Hey everyone, Mark here, and we're diving in today into a fascinating discussion that's been lighting up the crypto world with Bitcoin's recent surge past the $50,000 mark. Spotlight's back on the digital gold rush, and there's no better time to talk about what's fueling this phenomenal growth. In a recent CNBC segment, Anthony Pompliano, a heavyweight in the crypto investment space, laid out some compelling points about Bitcoin's current trajectory. Pomp's insights are not just thought-provoking, they're a call to pay attention to the seismic shifts happening right before our eyes.
The verdict's in, right? Wall Street doesn't just like Bitcoin, they love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year, or this week. And so now you have four funds that are going to hit $1 billion of inflows. But the most interesting part of this is the inflows. These funds are doing $500 million a day of net inflows. But there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is being generated by the ETFs themselves?
Well, I mean, you can just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock.
There's $4 billion now for BlackRock, $3.5 billion for Fidelity, and then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Now let's zoom in on something that's just not interesting. It's potentially revolutionary in how we understand Bitcoin's market dynamics today. I'm talking about the massive inflows into Bitcoin ETFs and what this means against the backdrop of Bitcoin's creation rate. This isn't just about numbers, it's about a narrative about scarcity, demand, and the tectonic shift in investment patterns. Consider this, over the course of financial history, we've seen more than 5,500 ETF launches, as Pomp says. Yet the Bitcoin ETFs by BlackRock and Fidelity have done something unprecedented. They've smashed past $3 billion assets under management, otherwise known as AUM, within the first 30 days. This isn't just breaking records, it's rewriting the rulebook on investor appetite for digital assets. But it doesn't just stop there. Bitwise and 21 Shares ARK ETFs are on a trajectory to also hit $1 billion in AUM within the same breathtaking time frame. The daily inflows into these funds, a staggering $500 million. Let me repeat that. Every day, a new $500 million is flowing into Bitcoin. To put that into perspective, it's like injecting the economic output of a small nation into Bitcoin every 2 days. Let's juxtapose this with the creation rate of Bitcoin itself. Only 900 Bitcoin are minted daily, a number set in digital stone by the network's algorithm. This scarcity is by design, but when contrasted with a tidal wave of ETF inflows, it paints a stark picture of demand versus supply. Let's dive a little deeper. The inflow into these ETFs isn't just a trickle, it's a deluge. With $40 to $45 million worth of Bitcoin being created daily at current prices, the demand from these ETFs alone is approximately 12.5 times greater than the new supply. This isn't just an imbalance, it's an economic singularity that can have profound implications for the discovery and price volatility. But here's where it gets a little bit more interesting. Consider that 80% of all Bitcoin hasn't moved in the last 6 months. This suggests a market of low liquidity, where the vast majority of Bitcoin is held tight by investors betting on long-term gains. The tradable supply of Bitcoin therefore hovers around 200 billion. In this context, the ETFs have vacuumed up about 5% of the entire tradable supply of Bitcoin in just 30 days. This is more than just a market movement, it's a seismic shift. It indicates a level of institutional endorsement and investor confidence that's unparalleled in the crypto space. And another interesting factoid I saw noted elsewhere today in the discourse is that on the topic of the ETFs, they have combined in a short period of time, hovered up more Bitcoin than Michael Saylor, notable Bitcoin maximalist, has in the entire history of the MicroStrategy fund. So let's turn to some of these graphs here. So we can visualize the makeup of which of the top ETFs and their assets under management, how they're made up. As you can see, BlackRock and Fidelity hold the majority, but there's not an inconsequential amount under the second two as well, the Bitwise and the ARK ETF. And here in the second graph, we compare the daily ETF inflows to the amount of Bitcoin being created. When I say the numbers, it doesn't necessarily create a mental picture exactly like this graph will do. You can see the stark contrast isn't just a gap, it's a chasm, highlighting the demand that's out there outstripping the supply by leaps and bounds. And now we arrive at what I like to call the moment of truth in our journey through Bitcoin's current surge and what the future might hold. As we pull up this next chart, we're diving into a visual representation that's more than just lines and colors. It's a story of supply, demand, and the raw potential of Bitcoin leading up into its next halving event. Based on the insights from Anthony Pompliano and the unfolding market dynamics, we've crafted a projection that's grounded in hard data, yet speculative in its outlook. Here's what we're seeing. We're at a juncture where Bitcoin's price hovers around the $50,000 mark. mark. The demand surge is the ETFs, particularly those spearheaded by giants like BlackRock and Fidelity, as we mentioned, not only entered the arena, but are gobbling up Bitcoin at an unprecedented rate, absorbing about $20 billion of tradable supply in just 60 days. This isn't an everyday investment trend. As we said, it's a tidal wave. The mining supply, as you can see, is, as we've talked about 900 Bitcoin a day. After the halving, it'll be about half that. At the current level of cost, it's about $45 million worth of Bitcoin entering the market every day. We compare this to the $500 million inflows for the ETFs daily, and the scale imbalance becomes crystal clear and starts to compound upon itself pretty quickly. Our chart here showcases the two paths forward. The conservative projection, marked in blue, suggests a steady yet significant increase in Bitcoin's price, reflecting a sustained demand against a limited supply. And then there's the green line, our best case scenario, where we see a potential sprint towards $100,000. This isn't fantasy, it's a possibility grounded in the current market dynamics, assuming demand doesn't just hold, but escalates as we approach the halving. Understanding the delta in the shaded area between these two projections isn't just for show, it represents the range of uncertainty and the potential for Bitcoin to outperform even our most optimistic estimates. In a market driven by sentiment, innovation, and a bit of speculation, the true path of Bitcoin's price could surprise us all. As we dissect these projections, remember, we're navigating a landscape where traditional financial theories meet the uncharted territory of digital currencies. This graph isn't just a prediction, it's a tool for understanding the forces at play in the Bitcoin market as we edge closer to the pivotal moment in history. So what do you think? Is Bitcoin gearing up for another record-breaking run, or are we in for a surprise? Drop your thoughts in the comments and let's keep the conversation going. If you found this analysis helpful, don't forget to like, share, and subscribe for more insights from the world of tech and crypto. Till next time, this is Dr. Bitcoin signing off. The Merge Live goes out to business, finance, and tech events and grabs the signal from the noise. We cover news like a blanket, but the only way you're going to get it is if you subscribe right now.